Cardano could be on the verge of a major move, but the outcome depends on a few critical factors. Upgrades to the network, adoption of DeFi applications, and a significant regulatory wildcard all play a role. In this video, we'll break down Cardano's roadmap, explore different price scenarios, and highlight exactly what you should be watching in the coming months. Whether you're a long-term holder or just curious about ADA's future, this deep dive will give you the context and insights you need. Let's get started and see what's next for Cardano. Hey everyone, I'm your name and welcome to the channel. Before we dive in, remember this isn't financial advice, just my analysis and opinion based on the latest data and trends. If you're interested in short, timely updates on Cardano and want to stay ahead of the curve, make sure to subscribe. Today we'll look at ADA's current position, what's driving the project, and what could shape its price in the near future. Let's jump right into the market snapshot. As of today, Cardano ADA is trading around 60 cents to 62 cents, though live prices can vary by exchange. While this is below its previous cycle highs, it's important to note that the Cardano network has been anything but stagnant. Over the past year, there's been a flurry of upgrades and a noticeable increase in developer activity. This foundational work is setting the stage for potential future growth, even if the price hasn't yet reflected these changes. Let's take a closer look at what Cardano has been building behind the scenes. Cardano's approach stands out as research first, prioritizing a layered architecture that separates the ledger from computation. Its consensus mechanism, Ouroboros proof of stake, is a cornerstone of its security and efficiency. The project's roadmap is divided into distinct eras: Byron, Shelley, Gauguin, Basho, and Voltaire. In 2025, Cardano is focusing on scaling solutions like Hydra, enhancing verification and security features for smart contracts, and improving governance. These efforts are all about making Cardano more attractive for real-world applications and institutional adoption. Looking ahead to 2025, several key catalysts could drive ADA's price. First, Hydra and other Layer 2 scaling solutions promise real throughput gains, which would lower transaction fees and attract more DeFi activity. Second, protocol upgrades like CIP's Mithril and Midnight aim to boost smart contract safety and provide better tools for developers. Third, ecosystem and developer growth is crucial, with more projects, higher total value locked, and real-world pilot programs. Finally, macro factors such as ETF activity, broader crypto bull runs, and institutional inflows could all play a significant role. Hydra is Cardano's flagship Layer 2 scaling solution, designed to dramatically increase throughput and reduce transaction costs. Successfully implemented, Hydra could make Cardano a top choice for DeFi projects and high-volume applications. Lower fees and faster transactions would attract more users and developers, potentially boosting ADA's value. This upgrade is one of the most anticipated in the Cardano community, and could be a game-changer if it delivers on its promises. Beyond scaling, Cardano's protocol upgrades are set to enhance the safety and functionality of smart contracts. Initiatives like CIP's, Cardano Improvement Proposals, Mithril and Midnight are all about providing better tools and security for developers. These upgrades are crucial for attracting more projects to the Cardano ecosystem and ensuring that the network remains competitive with other smart contract platforms. The focus on security and developer experience could be a major draw for institutional players. Thriving ecosystem is essential for Cardano's long-term success. More projects building on Cardano, higher total value locked TVL, and successful real-world pilots all contribute to the network's credibility and adoption. Developer growth is a key metric to watch, as it signals increasing interest and innovation within the Cardano community. The more robust the ecosystem, the greater the potential for ADA's price to appreciate over time. Cardano's price isn't just driven by its own upgrades. Broader market trends also play a huge role. ETF activity, overall crypto bull runs, and institutional inflows can all impact ADA's price trajectory. When the market is bullish and institutions are entering the space, projects like Cardano often see increased demand. Keeping an eye on these macro factors is essential for understanding potential price movement. The technical side, ADA has shown long periods of consolidation, with resistance near previous highs and support in the mid-$0.40 to 55 cents range. A strong breakout, especially if accompanied by high trading volume, could signal the start of a new bullish trend. Technical analysis helps traders identify key levels to watch and potential entry or exit points. Let's explore what the charts are telling us right now. The most optimistic scenario, ADA reclaims the $1 mark and targets $1.05 to $2, especially if Hydra scales successfully and institutions start adopting Cardano. This would require strong execution on upgrades, continued ecosystem growth, and favorable market conditions. If these factors align, ADA could see significant upside, rewarding both long-term holders and new investors. In a more moderate scenario, ADA gradually moves to the 80 cents to $1 range as upgrades roll out and adoption increases at a steady pace. This outcome assumes that Cardano continues to make progress, but without any major breakthroughs or setbacks. It's a realistic path if the project delivers on its promises but faces normal market volatility. In the bearish scenario, delays in upgrades or negative regulatory developments could push ADA back to the 40 cents to 60 cents range. This outcome highlights the risks associated with ambitious roadmaps and the unpredictable nature of crypto regulation. It's important for investors to be aware of these potential headwinds and plan accordingly. There are several signs that could indicate it's time to be bullish on ADA. A noticeable rise in active smart contracts and wallet addresses, an increase in total value locked TVL across DeFi platforms, successful rollouts of Hydra, and growing institutional interest or ETF flows are all positive signals. Watching these metrics can help you gauge when momentum is shifting in Cardano's favor. Surge in active smart contracts on Cardano is a strong indicator of growing utility and developer engagement. As more decentralized applications launch and users interact with the network, it signals that Cardano is becoming a preferred platform for innovation. This kind of activity often precedes price appreciation, as it demonstrates real-world demand for the network. The increase in the number of active wallets is another bullish sign. It means more users are joining the Cardano ecosystem, whether to hold ADA, participate in staking, or use decentralized applications. Wallet growth is a fundamental metric for any blockchain project, reflecting both adoption and network health. Total value locked (TVL) in Cardano's DeFi ecosystem is a key metric to watch. Higher TVL means more assets are being used in decentralized finance applications, which boosts network activity and credibility. If Cardano can attract significant DeFi projects and liquidity, it could drive both usage and price appreciation. Successful rollouts of Hydra will be closely watched by the community and investors. If Hydra delivers on its promise of scaling and low fees, it could be a major catalyst for ADA's price. Monitoring the progress and adoption of Hydra will help you anticipate potential bullish moves. Institutional interests such as ETF flows or large-scale investments can have a significant impact on ADA's price. When institutions start allocating capital to Cardano, it often signals confidence in the project's long-term prospects. This kind of attention can drive both price and adoption higher. Of course, there are risks and red flags to be aware of. Delays to major upgrades, low developer adoption, regulatory classification risks, and macroeconomic factors like liquidity drying up can all negatively impact ADA's price. Staying informed about these risks is crucial for making sound investment decisions. Delays in rolling out major upgrades like Hydra or protocol improvements can dampen investor enthusiasm and slow down adoption. The crypto space moves quickly, and projects that fall behind risk losing momentum to competitors. Keeping track of development timelines is essential for assessing Cardano's prospects. Low developer adoption is a significant risk for any blockchain platform. If developers aren't building on Cardano, the ecosystem could stagnate, limiting new applications and use cases. Encouraging developer engagement through grants, tools, and support is vital for long-term success. Regulatory classification risk is another major concern. If Cardano is classified unfavorably by regulators, it could face restrictions or even delistings on major exchanges. The regulatory landscape for crypto is constantly evolving, so it's important to stay updated on any changes that could impact ADA. Macro liquidity drying up, such as during market downturns or tightening monetary policy, can also put pressure on ADA's price. When liquidity is scarce, even fundamentally strong projects can see their prices drop. Monitoring broader economic trends is just as important as following Cardano-specific news. For long-term investors, dollar-cost averaging (DCA) is a practical strategy to manage volatility and build a position over time. Traders, on the other hand, should focus on volume and breakout confirmation to identify optimal entry and exit points. Having a clear plan and sticking to it can help you navigate the ups and downs of the crypto market. Dollar-cost averaging (DCA) involves investing a fixed amount at regular intervals, regardless of price. This approach helps smooth out volatility and reduces the risk of buying at the top. It's a popular strategy among long-term crypto investors who believe in the project's fundamentals. Traders should pay close attention to trading volume and breakout confirmation. High volume during a breakout can signal a genuine move, while low volume may indicate a false start. Using technical indicators and setting stop losses can help manage risk and maximize gains. Recap: Cardano has a credible technology stack and a clear roadmap. The real upside for ADA depends on the successful rollout of Hydra, continued developer adoption, and favorable market flows. Conservative odds suggest a steady recovery to the 80 cents to $1 range, but bigger rallies will require flawless execution and a bit of luck. Staying informed and adaptable is key to making the most of Cardano's potential. Cardano's roadmap is structured around 5 major eras: Byron, Shelley, Gauguin, Basho, and Voltaire. Each era introduces new features and improvements, building on the previous foundation. This methodical approach ensures that upgrades are thoroughly researched and tested before being implemented, reducing the risk of major issues down the line. Ouroboros is Cardano's unique proof-of-stake (PoS) consensus mechanism. It's designed to be energy efficient and highly secure, making it a standout feature compared to traditional proof-of-work systems. Ouroboros underpins Cardano's network, ensuring that transactions are validated quickly and securely while minimizing environmental impact. Hydra is a Layer 2 scaling solution for Cardano, designed to increase the network's throughput by processing transactions off-chain. This means faster transaction speeds and lower costs, which are essential for supporting DeFi applications and mass adoption. Hydra's success could be a turning point for Cardano's competitiveness in the blockchain space. Smart contract safety is a top priority for Cardano. Upgrades like Mithril and Midnight are focused on enhancing verification and security, making it safer for developers to launch complex applications. These improvements help build trust in the platform and attract more projects to the ecosystem. Governance improvements are a key part of Cardano's roadmap, especially in the Voltaire era. Decentralized governance allows the community to propose and vote on changes, ensuring that the network evolves in a way that reflects the interests of its users. This participatory model is designed to make Cardano more resilient and adaptable over time. Decentralized finance (DeFi) is a major growth area for Cardano. By enabling smart contracts and supporting a wide range of financial applications, Cardano aims to become a hub for DeFi innovation. The success of DeFi on Cardano will depend on network scalability, security, and developer engagement. Institutional adoption is a long-term goal for Cardano. By building a secure, scalable, and compliant network, Cardano hopes to attract banks, asset managers, and other large players. Institutional involvement can bring significant capital and credibility to the ecosystem, driving further growth. ETF activity is an important macro factor for Cardano. If ADA is included in major crypto ETFs, it could see increased demand from institutional and retail investors alike. ETF flows can provide a steady source of liquidity and help stabilize prices over time. Crypto bull runs are periods of rapid price appreciation across the market. During these times, projects with strong fundamentals like Cardano often outperform. Understanding the timing and drivers of bull runs can help investors position themselves for maximum gains. Total Value Locked (TVL) measures the amount of assets secured in DeFi protocols on Cardano. A rising TVL indicates growing trust and usage of the network's financial applications. It's a key metric for assessing the health and adoption of Cardano's DeFi ecosystem. A vibrant developer ecosystem is essential for Cardano's success. The more developers building on Cardano, the more innovative applications and use cases will emerge. Supporting developers with grants, tools, and community resources is a top priority for the project. The regulatory landscape for crypto is constantly evolving. Cardano's ability to adapt to new regulations will be crucial for its long-term viability. Staying compliant while maintaining decentralization is a delicate balance that the project must navigate. Market volatility is a defining feature of the crypto space. Prices can swing wildly in response to news, sentiment, or macroeconomic events. Understanding and managing volatility is key for both traders and long-term investors in Cardano. Liquidity management is important for both the Cardano network and its investors. High liquidity ensures that large trades can be executed without significant price impact, while low liquidity can lead to sharp price swings. Monitoring liquidity trends helps investors make informed decisions. Effective risk management is essential in crypto investing. This includes setting stop losses, diversifying your portfolio, and staying updated on project developments. By managing risk, investors can protect their capital and stay in the game for the long term. Cardano's community is one of its greatest strengths. Active engagement from users, developers, and stakeholders helps drive innovation and adoption. A strong community can also provide valuable feedback and support during challenging times. Looking ahead, Cardano's future will be shaped by its ability to deliver on its roadmap, attract developers, and navigate regulatory challenges. The next few years will be critical for establishing Cardano as a leading blockchain platform. Staying informed and adaptable will help you make the most of the opportunities and challenges that lie ahead.